Okay, we're now getting into a very important topic here. We're going back to the accounting equation and we're going to start looking at what is debits, what are debits, and what are credits. If you haven't heard of those terms before, this will be one that you will have to come back to and refresh yourself on. So, the accounting equation. We introduced this last week. This just says, each of the elements, we have the totals that we know for the business. And this says, if we take our assets and take the total of our expenses and we add them up, that's going to equal our liabilities, our owner's equity, and our revenue items, if we add those ones up. Now, when we come to the accounting equation, we can say that each of these account names are of a particular nature. So these things, these are on the left-hand side of that equation, that equal sign. So they're on the left. And so if there's a balance in any of those accounts, then it's probably going to be recorded on the left-hand side. Now, we don't call it the left-hand side, we go back to a very old term, and we call it a debit. Just in this context, it just means on the left. So, debit's on the left, and so if there is going to be an asset, maybe a hotel building, when we record it, that balance is probably going to be on the left-hand side. Now, there's a shorthand way of writing debit, and it's DR. You'll see why in a second. So, these are assets and expenses. They are what we call the debit in nature. They're normally debits, or on the left. So, we're just going to look to the other side, and we've got our liabilities, owner's equity, and revenue. Well, these are on the right-hand side of that equation. Now, on the right, well, we don't use again the word right-hand side, we use the word credit. So credit just means literally on the right-hand side, or we can write CR for short. Now, this is a really important part. So, anytime you have assets and expenses, they're debit in nature. So, they're probably going to be recorded on the left-hand side. Anytime you have liabilities, owner's equity, or revenue, they're on the right-hand side of the equation. These guys are normally recorded as credits. So, assets and expenses, debit in nature, or when there's a balance, they're normally a debit. Again, the other things on the other side, liabilities, revenue, owner's equity, they're all credit in nature. So, when we start looking at, well, we have sometimes a transaction, and making things go up and down. A debit can make an asset and expense go up, and on the other side, liabilities, revenue, owner's equity, a credit makes those balances go up. And the flip side happens as well, which I will go through in a minute. Okay. So when we look at debits and credits, we need to think about each individual account. So think about maybe a bank account. Each account has two sides. So every account has two sides. So, got the example there of the bank account having two sides. So each side has a left-hand side and a right-hand side. So, left-hand side, that's the debit side. Right-hand side, well, that's the credit side. Now, this now replaces adding and subtracting. So we don't actually do that in accounting. things are recorded as either a debit or as a credit on the left or on the right. So here's an example. You have $1,000 in your bank account. You then receive $500 and then you spend $800. So what balance do you have now? Now you could easily do this in your head. You could do this in your head and go, well, $1,000, and I add 500, now I've got $1,500, then I take away 800, well, I'm left with $700. That's fine, but that's using subtraction and subtraction and addition. Now in accounting, you need to put it in terms of debits and credits. So here, if you've got money in the bank, that's normally going to be on the debit side. So if you've got $1,000, that's going to be $1,000 balance. So that's going to be on the debit side, the left-hand side. That's where we record it. Now we receive $500. Now $500 increases the amount of money we have. So that is also on the debit side. So if we were to add up these two right now, we now have $1,500 debit. Again, that shows the balance of our asset. But we don't have that much, do we? Because some money went out. And so this is the other thing, that debits and credits affect the balance of each account. So in this case, $800 went out. So we have $1,500 on this side, $800 on this side. Our debits minus our credits, offsetting, that gives us a balance of $700. We'll come back to this next week when we look a bit more at T accounts. But this is just a simple illustration that we don't use subtraction and minus for all the transactions. We want to record things as either debits or credits, and they impact on the balance of each item. So in this case, we've had the bank balance there, and again, we're left with a balance of 700. Now, the important rule is that when you're looking at things, your debits must always equal your credits. So when you record a transaction or recording anything, the debits must always equal the credits. So if you take all the balance of all the accounts, on the left-hand side, the debits should always equal the right-hand side, the credit side. So just illustrate with a simple case. We've got 3 accounts. I'm just popping them up on the board as I talk. We have a bank account, and we're told that the bank account has $100,000 in it. The loan account has $30,000 in it. And then capital, what comes from the owner, that's $70,000. So what I've just done is I've done 3 T accounts. Hopefully you can see them here. So the bank account has $100,000 in it. Now we're told that an asset is normally on the left, normally a debit. So that $100,000, that's on the left-hand side. Now we're told that they have a loan from the bank. So liability, they have to pay the money back. That's normally recorded on the right-hand side. So let's go up here. That's $30,000 on the right-hand side. And finally, I've got capital. So capital is what the owner has introduced. Owner's equity is a credit on the right-hand side as well. So if you take the total of all the accounts, you find that you have $100,000 on the left-hand side, and it equals $100,000 on the right-hand side. So So our debits equal our credits. And this is always true. If your debits do not equal your credits, then you've recorded some transactions wrong. Then maybe it's a balance that's gone wrong, maybe a transaction's in the wrong spot. But always debits should equal credits. Okay. Yeah. So again, just illustrating. Debits must always equal credits. Okay, we have this little slide here. This is an important table. I encourage you to memorize it because this goes through the debits and credits to make something happen. Okay. Along the top, you've got the elements. Assets and expenses in one, revenue, liabilities, and owners' equity in the other. Along the bottom, you've got to increase the balance and then to decrease the balance. So you match up the two items you want to do, and that will tell you whether you need to debit that account or credit that account. So I'll just quickly show you an illustration. So for an asset, if you want to increase the asset, so you line up assets and increase, where does it intersect? Well, you need a debit. So for example, if we receive $5,000 from a customer in sales, we put it into our bank account. The bank account goes up. Then it is a debit because it's an asset going up. Now another quick example, an asset going down. So assets, and to decrease the balance, maybe we've paid out and purchased a vehicle for $20,000. That says, well, we need to credit somewhere. We need to credit that asset account. On this side, we put it on the right-hand side, the credit side. And no longer do we have 105,000. We've now got $85,000. So there you go, if you can hopefully see the detail. $100,000 we started with. We increased it by 5,000 using a debit. And then we decreased it by $20,000. So now there's $85,000 in the bank. Okay, we'll go into more detail in class about debits and credits. But this is the fundamental part of accounting, that every transaction that happens, every transaction that you have to do, and there's always two accounts involved, there's always going to be a debit involved and a credit involved. And how it impacts on each of the elements, well, that's either the debit or the credit side.